Out of all the weekly dividend ETFs, there is one I need to highlight, and an ETF provider that I also need to highlight because the changes to ticker ULTY have saved this ETF. Not only that, but they may have pushed it to the top of my list. And I'm going to tell you why. This video is going to be a full breakdown on ULTY, the changes that they made, the history of how it was trading prior to these changes, and how it has been trading since. So I hope you guys enjoy. I hope it does answer some of the questions that you guys have had about ULTY and if it is viable long term. I will say I'm very excited. We're going to get into all the details and more. But if you are interested in weekly dividend stocks, in ETFs, in making money in the stock market, you are in the right place. Don't forget to like and to subscribe so you never miss the free updates and find out what is making investors the most money in the income investing space. Let's roll that intro. We need to give credit to where credit is due, and that is to YieldMax. Now, I've talked about YieldMax over and over and over again, but this is a key point in their strategies that I want to highlight. They saw what was happening with ULTY, and they fixed it. We're going to go over how they fixed it, but I do want to say this was a atrocious looking ETF. I mean, look at that. All in all, it's down 68.65%. On the 1 year, it's down still 54%. So what shifted? Well, this was the basic description of NAV erosion. It was paying out monthly dividends. Every time the dividend would pay, it would drop. It would not climb back past the prior drop point, and you would just see it continue to fall, right? So it would pay out a dividend, go from $10, $11 down to 10. This one actually did go back up to 10.70, but not back up to 11, and then it fell to 9.60. Then it climbed back up to 10.20, and then it fell to 9.30, and then it never climbed back up from that point, and we continued to see it in a downtrend. So what happened? Well, they realized that it was not working. I believe it was operating off a synthetic covered call position, similar to how some of the other ones do. And just with the underlying stocks, which they didn't actually own, it didn't make sense. It was not working, and they knew that. Then in March, we saw a shift. I believe it was March 12, which was the first weekly dividend we saw from ULTY. So technically, it may still be down 4% since converting to weekly. But there's some things we need to talk about. The AUM, or assets under management, has doubled. More than doubled, actually. And I know this because when I first purchased ULTY and I put it in my weekly dividend account update, the AUM was $230 million. I just checked, and it currently sits at over $500 million and is continuing to grow. Last time I did an update on this ETF, it was at sub 500, meaning $480 million. So people are buying into this one simply because they fixed it. Now I'm going to go over the breakdown of ULTY, what the goal is behind the funds, what they hold, and a lot of more information, of course. But I am really impressed with YieldMax for fixing this ETF. There are some things we're going to go over. This thing is not perfect. We still have some, I'm not going to say flaws, but some potential downsides depending on the market. And we have a lot of high risk involved with this one, as we do with a lot of the YieldMax ETFs. But all in all, I am very, very impressed with what they were able to do and to turn this thing into an absolute income producing machine at a very, very cheap price. So let's jump onto the YieldMax website and see what I'm talking about. Before we get started on the YieldMax website, I recommend if you're interested in MSTY, one of the most popular YieldMax ETFs, check out my new podcast with the YouTuber Marcus Mia. We just started. We have one episode out, but it got a lot of love, and I appreciate all you guys that watched it. Go check it out, The ETF Guys, on YouTube and on Spotify and Apple, coming soon. Okay, back into ULTY. They have the distribution rate at a 72.5%, which is very solid. The last time I calculated it from just the weekly payments, it was higher. It was around 90%, but I'm not 100% sure how it's going to be over the next couple of months. We could see it rise. We could see it fall. I wouldn't be surprised if it fell a little bit, but that does depend on the overall market. So some key factors here as well. It's an actively managed ETF, generate monthly income. Actually, it's weekly income now. For those that don't know, it is a weekly payer, and it involves a high degree of risk. Now, something that's different is it doesn't have the not actually invested, which a lot of the other ones do, like MSTY, PLTY, because they're synthetic. What we do see is it is capped. The underlying securities, the total return is capped, and it is subject to all the potential losses if the shares of the underlying securities decrease in value, which may not be offset by the income. And that's the fear with income investing. And it's the problem with some of the YieldMax ETFs that have not been performing well at all. Now, I'm not tracking the 1 year. The 1 month, it is up 13%. It has been absolutely kicking booty. And the distributions have been they've been solid as well. So when it was paying monthly, it was in the 40s, 50s, but it was a little bit all over the place. When it converted, it dropped to the 10 to 8 cent range, and it's staying very steady. This last one was a little bit lower, a little under 9 cents, but that's what happens. It all depends on the implied volatility, which depends heavily on what is invested, what this is invested in, I should say. And that's what we're going to look at. We're going to look at the actual investments for ULTY, and then we're going to look at a Reddit post that highlights exactly why it's changed and for the better. I was wrong. We're going to look at Reddit first. This is the main reason. I know Reddit is an open forum, so anyone can talk about anything, but it's the best area where I found all the information in one spot. So I did check this with a lot of other factors, and I want to know what you guys think about this data as well. And there are some things in the comments that I will discuss because there were some errors that were fixed. So the changes from March to April made a big difference. That's what this user is saying. Useful discussion 79. Thank you for your input. And here's what happened. Protective puts that give you downside protection against the loss at the expense of a slightly less yield, which I am okay with because we've seen these that don't have any protection, and holy smokes, any down day in the market, you are getting shredded. The credit call spread. Directly capture more upside than a traditional covered call where you get capped. The cons is slightly less yield depending on how they do it. And again, we're still seeing a phenomenal yield, and it's cheap. So there's a lot of things that go into it. Flexibility to write calls on portions of the underlying, and they can write 100% on some stocks while less than 100 on others, meaning they're picking and choosing the best ones for the options, which I like. They're not all clumped into the same percentage point. And then, of course, the weekly distribution, which has been interesting. And they do say here that it contributes to the NAV, that people think it contributes to the NAV stability, but it does not. Long-term, the shift with how they're running the ETF is what's making the difference. I will say we have seen a lot of influx of people investing into this ETF. I mean, like I said earlier, the AUM has doubled. So there is a lot more people interested in, and that is also helping. Now, they also have the good features, like he states, actively managed, and we're going to look at all of the underlying investments as well, but they're very actively doing a lot of trades. That explains the expense ratio, unfortunately, being typical to YieldMax ETFs, but still higher than average. They own many of the underlying, and that is key. That is really, really interesting now, and I think that difference has been outstanding for the performance of ULTY. Currently, they have a very good combination of underlying such as MSTR, NVIDIA, and various other high implied volatility stocks. And that's what we're going to look at right now. Now, when you come with high volatility, you get higher risk as well, and typically you see lower market cap. So some of these do have really high market caps. NVIDIA and MSTR are nowhere near low market caps, but there are some with lower market caps, and some more fluctuations in the price is common. So I'm going to talk about one of the major cons that we will see with ULTY on the next page. It's not the prettiest, but bear with me. I'll try and talk slow for those where it's harder to see what is on screen, because this is just the downloaded spreadsheet of the holdings. So we can see a lot of things that we are anticipating, right? ASTS, Coinbase, Circle, eToro, FSLR, HIMS. This is a really interesting one because I didn't even know this stock was going so crazy, and it is. Robinhood, ticker HOOD, has been insane. They also have a few more that I want to look at. LabU. This is really interesting. It's the daily S&P Biotech Bull 3X. I've owned this before, and I mean, oh my goodness. These biotech stocks are nuts. I used to make plays with biotech, and it was terrifying. We have MARA, which of course, high volatility, MSTRs here, PLTR, Reddit, which if you haven't looked at Reddit stock, absolutely crazy. And then some other ones, Supermicro Computer. We have Temu, Ultra Pro, QQQ, Tesla, Upstart. So there's a lot of good holdings and a lot of stocks I do like, but some of them are on the smaller side when it comes to market cap for that volatility. And here's where we're going to see the problem with ULTY's new strategy that we haven't seen yet, because the shift happened during a very bad time in the market, and we've seen a lot of these stocks bounce back, and that is contributing to our total gain. But if we do see more of a bear market come back around, you will see a lot of these fall, including ULTY, because it holds the underlying now. So there's a big difference there than the synthetic covered call options, but There's pros and cons with each. I'm not going to get too far into the details with the synthetic covered call options because I'm not an options expert and I don't want to lead anyone astray. But I am happy with the difference that we are seeing with ULTY, and it's reflected in our drip calculator. So we're going to jump into that right now. So I am picking and choosing the dates because I put in the day it converted to weekly. And that was just a better time in the market. But we can see it still would have been down 8 or 9% at one point. So I'm not just cutting out the bad that we saw. And it just so happens that they did a really good job of converting it to weekly when the market flipped. So if you had invested $10,000 on March 10 of 2025, it would now be worth $12,416. That is a total return of 24.16% in a couple months. Annualized, it's 88.19%. That is hard to beat, and that, of course, is with drip on. With drip off, it's still solid, $12,086, about a $380 difference, and percentage-wise, you're pretty close, 3% off. So drip is an interesting factor with these. With ULTY's price going back up, I will say, and for those that don't know, drip is dividend reinvestment, meaning when you get paid a dividend, you automatically buy more shares of whatever paid you. And I will say I typically don't like drip. My newest drip strategy, I do like drip. My newest strategy, though, has been dripping on my own terms, meaning I don't drip when the stocks or ETFs are at all-time highs. I wait until they dip, and then I buy more. And I like that. I have more cash on hand for other investments as well. But with ULTY, because we're not seeing crazy fluctuations in the price. Sure, it went from 580 to 630, and that's a good little gain. But we're not seeing it go from $6 to $8 and then back to $4 and then up to $12. And so drip being on is not the worst case scenario for me. And I will say this is in our $1,000 YieldMax ETF portfolio where I'm putting all of the top YieldMax ETFs against each other. And if you want to check out that video, I'll link it at the end of this one. But I've been very impressed with ULTY, and I hope it can keep up this strategy because it's taking some really solid stock picks, some high implied volatility, and paying us these nice, juicy weekly dividends. And I will say one of the main components I have for drip is if you get, I got $100 in one of the accounts into ULTY, and it already gained me within a couple of weeks, it got me an extra share and a half. So the ability to compound with it is phenomenal because of the weekly dividends and the cheap share price. So I hope you guys enjoyed this video. If you found it informative, educational, or entertaining, don't forget to like and subscribe. And if you're interested in that podcast, check out the video popping up right now. I'll link you right to the podcast as well as to our last video on the total return for the YieldMax ETFs in 2025. So I hope you guys enjoy those. Thank you so much for watching. I really appreciate it. You guys are phenomenal. Don't forget to like and subscribe, and I hope to see you in the next video.